the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market ended the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares dipped earlier today as equities in the region traded mixed. So if we look at the Straits Times Index, it was down 0.19% at 4,003 points at about 12:30 p.m. Singapore time, and that is with a value turnover of 529 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI, as we shared with you earlier, ended in the green, up 0.22% at 4,019 points. In terms of value turnover, we are looking at 1.19 billion Sing dollars. The gainers outnumbered losers 277 versus 215. Top advances for today, we've got GMH USD, HPL and DFI Retail Group USD. And top decliners we have for you, Hopper, iFast and UOL. Well, in terms of companies to watch, we have Seatrium because the group has secured a floating storage regasification unit conversion contract from energy company Kinetics. Now, elsewhere from market participants' reactions to a trade deal reached between the US and Vietnam to how the Trump administration lifted some export license requirements for chip design software sales in China, we've got more international headlines in focus. And joining me on the line on a Thursday is Terence Wong, CEO of Azure Capital. Terence, welcome to the show.
Hello, Tian Tian.
How are you?
Happy Thursday? Yeah, with you it's always Thursday. Happy Thursday.
I don't know whether it's a happy Thursday or not because there are so many things going on and so many moving parts.
It's definitely eventful, yes.
Okay, an eventful Thursday. And speaking of eventful, Terence, let's start with the US this time around. I mean, the US dollar continued to struggle after data showed the private sector unexpectedly shed jobs last month for the first time since March 2023, suggesting that the labour market was slackening. I believe the ADP private payrolls report showed a contraction of, was it 33,000? So how did equity markets fare in response as investors look ahead to the non-farm payrolls out today?
Well, despite the surprise contraction in private sector employment, and that suggests softening in the U.S. labour market, equity markets actually held up relatively well. But this is how markets, I think, typically react. When bad news is good. I know it's very, very perverse. With the shrinking of jobs, investors are increasingly betting that, that could prompt the Fed to ease rates sooner rather than later. They've been talking about it, and they're trying to make bets on that. Ahead of tonight's non-farm payrolls, we saw some cautious optimism with the major indices like S&P 500, NASDAQ, at least for yesterday, ending higher at 0.5% and 0.9% respectively. Tech stocks also expectedly outperformed, reflecting expectations of a more dovish policy stance.
I see. And Terence, let's turn the spotlight on Asia right now. U.S. President Donald Trump announced that a trade deal was reached with Vietnam, and Trump added that under what he calls the quote-unquote Great Deal of Cooperation, imports of Vietnamese goods will face a 20% U.S. tariff, while goods that pass through Vietnam to circumvent steeper trade barriers will see a 40% tariff. How did Asian investors react to the news, though?
Well, I think, again, expectations govern everything over in the stock market. If I were to tell you that Vietnam is slapped with 20%, you probably think that there's going to be a shock to the system. But in this case, the Vietnamese stocks actually hit a 3-year high briefly this morning after U.S. President Donald Trump said that there's a trade deal has been struck with Vietnam. Of course, as the day went past, it gave back some of its gains, but not by much. It ended relatively flattish. The rest of Asia indices were mixed, and I don't think that they were particularly affected by this deal between U.S. and Vietnam. Though we did see some U.S. exporters facing some pressures. So back to the deal, while the 20% tariff on Vietnamese imports under this, like what you mentioned, a great deal of cooperation raises concerns. I think another part to look at it will be the harsher 40% tariff on transshipped goods. and this reflects very well that U.S. is trying its best to tighten enforcement. Transship goods for the uninitiated, they are those which originated from one country but brought to another for final shipping. And what China has done is really to bring a lot of its goods to Vietnam and then ship to U.S. and enjoying the better tariffs. So U.S. is trying to block that out. And in an attempt to hit back China, they've raised the transship taxes or the tariff to 40%. U.S. makes up about 8% of Vietnam's economy, and tariffs is definitely negative for the country. But on the flip side, Vietnamese dong, it has weakened to a record low, I think over 26,000 per dollar after the trade deal, and that should provide some buffer for the 20% tariffs.
I see. And, speaking of trade deals, Terence, we've got less than a week to go, and so far only 3 countries have hammered out deals with the U.S. before Trump's July 9 deadline. What does it mean for regional investors? Are investors concerned that trade deals with the U.S. would isolate China from global supply chains, or have they priced that in already?
Well, with only 3 countries finalizing deals, like you mentioned, I think the region is treading quite carefully. But you don't know. I mean, things can happen fairly quickly, right? Investors, they are concerned with a more segmented global trade environment, and that could have an impact on China. And given that our economies are very, very intertwined, I think that's one to look out for. While some of the risk has been priced into the equity markets, especially in terms of the Chinese manufacturing and logistics stocks, uncertainty is still looming. ASEAN markets are, I believe, watching very, very closely, balancing opportunities from potential supply chain shifts with caution over escalating geopolitical tensions. But I do think that, looking ahead, there is some urgency on our side, or at least within ASEAN, to actually hammer out deals like what Vietnam has done with Donald Trump.
I see. And, Terence, in the past we were just talking about the STI crossing 3,900. Now we are looking at 4,000 over points. So going back to the Singapore stock market as usual, how did the STI fare today? Any surprises when it comes down to the companies to watch, say, Seatrium, which we talked about earlier?
Yeah, I think it did a very good. You always do a good rehash of the Singapore market. So let's focus on Seatrium since you asked about it.
Okay.
It moved up a little bit, rose after securing they call it FSRU. I think it's a mouthful. Floating storage regasification unit, right? Conversion contract with Kinetics. This company is an energy transition initiative by the Turkish global floating power leader Capital ship. And I don't think it's very much of a surprise, given that both parties have been working together for quite a while right now. In fact, this is Seatrium's 7th FSRU project for Kinetics. 2 more conversions. 2 of the FSRU conversion projects, in fact, are in progress right now at its yards, and the deliveries are expected to be sometime this year or the first quarter of 2026. So the relationship is actually fairly tight, and it underscores Seatrium's capabilities in this energy infrastructure space. It's moving into a new area, so I think that, or at least it has been very, very evident that Seatrium has moved and diversified into other areas, and which I think is good and is a very big positive for the stock.
I see. Now, if you're just tuning in, we're in conversation with Terence Wong, CEO of Azure Capital. Well, Terence, another company to watch for today is Ban Leong Technologies. We don't always talk about this company. So apparently video game distributor Epicsoft Asia's voluntary unconditional cash offer to take the tech products distributor private, that closed at 5:30 p.m. yesterday. So trading of Ban Leong shares have since been suspended. But really, how would you read into that acquisition by Epicsoft Asia?
Yeah. Not only do we normally not talk about this company, we never talk about this company.
I think we never.
Rarely,
yes,
you have mentioned
never
it
is the
before.
word. Never is the word.
I've never done it with you before.
Yes.
Right. So, just for the listeners, Ban Leong is actually a fairly old name. Yeah, it's almost more than 20 years ago. 2005 it listed.
Wow.
It's a wholesaler and distributor of computer peripherals, accessories, and other multimedia products. I think I even visited its factory or its warehouse. It distributes a wide range of technology products, with they push boxes basically with key segments including IT accessories, gaming, multimedia, smart technology, commercial products. So the works they do a lot of it. And what Epic Soft does is really like a lot of the gaming stuff, online games. So there are some synergies. I believe that's why there's this acquisition. And as with as with most acquisitions, they do hope that that it is going to be a 1 + 1 = 3 type. With this strategic move to streamline operations and potentially to prepare for more AI-focused product pipeline.
I see. And further away, Terence, some news out of Microsoft saying there that it'll lay off nearly 4% of its workforce, or about 9,000 people. And the latest job cuts as it seeks to rein in costs amid hefty investments in AI infrastructure. How far is this a cause for concern for you?
I remember we have been talking about this layoffs among tech guys for quite a number of years, since 2022, 2023. We have mentioned it a few times.
Yes.
Off and on, we get these big numbers, and then we start to read into it. 9,000, of course, 9,000 employees, not small. It seems to be more about reallocating resources than a sign of distress. So with the company ramping up investments in AI, these cuts are part of a broader restructuring to stay agile, I guess. So while it may spark short-term concerns about sector-wide hiring or firing, I think long-term investors should see Microsoft strategy right now as sharpening its focus, and this could be good in the long run because it just improves productivity and margins.
Okay, and finally, before I let you go, Terence, we must talk about this one. The Trump administration lifting at least some export license requirements for chip design software sales in China, as Washington and Beijing implement a trade deal designed to see both countries ease flows of critical technologies. Now, according to a company statement by Siemens, I believe, the U.S. Commerce Department has informed Siemens that requirements to seek government licenses for business in China are no longer in place. How far is this, though, a reason for investors to be optimistic about the global tech sector?
Oh, the Donald just surprises us every now and then. Actually, not every now and then, just every now
every day.
And now, every day, practically every day, right? Well, and I think that this is definitely a positive. It signals a little bit of a thaw in tech tensions between U.S. and China. For investors, it's a green light that some critical tech flows will start to resume, and this is very good. I think this is supportive of the global supply chains. Tech stocks, I believe, looking at what has happened, let me check, has responded favorably, and this could be the beginning of a more targeted easing if broader trade diplomacy holds. Relationship between U.S. and China, just now I said, is thawing, is warming somewhat following the phone call between Donald Trump and Xi Jinping early this month, or early last month, right? China had agreed to supply U.S. companies with magnets, with rare earth metals, while U.S. will actually reverse its threats to revoke visas of China's students. Both leaders have invited each other to their respective countries, and I think Donald Trump is preparing to go over to China sometime later part of this year, right? So I think all these are positive developments, but I won't count the chickens before they hatch, because anything can happen.
Yeah, indeed. Lots to watch as usual. Thanks so much for the insights, Terence. That was Terence Wong, CEO of Azure Capital. Thank you so much for joining us on Money FM 89.3.
Thanks, Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.